Now, if you take that and bring it to money, whether it's monetary energy with Sailor, or however you think about it, if there's infinite amounts of dollars or euros or pounds in paper, how are you supposed to value the paycheck that you get today? If they can print infinite amounts, like as if you could live forever, then nothing's valuable. And so Bitcoin as a finite promise, it actually allows me to not only value my paycheck today and the money I have now, but it's this idea of opportunity cost of, should I go spend unlimited amounts of money on marketing, hire tens of thousands of employees, launch tens of thousands of products. In a fiat world, sure, why not? Zero interest rates, unlimited venture capital, and it's all about top line growth, print. But if you introduce the promise of you can't print any more Bitcoin, the promise of debt, the way we think about it at Strike is Bitcoin averages annually 63% over the last 10 years. And so we use that metric of, is what we're going to do as a business, are we going to be able to beat 63%? Because if not, it's not worth it, right? We actually have something we can measure our business against, a real cost of capital, because capital isn't this thing that governments print out the wazoo that's a worthless piece of paper. Capital is actually accretive to our shareholders. It's beneficial to store on our balance sheet. Building a big capital base is actually useful. You hear Michael Saylor talk about having $500 million of cash was just a melting ice cube. But having $500 million of Bitcoin is a strong capital base you could change the world with. And so that's our approach internally, is it's a real cost of capital. We try and measure that cost of capital, whether we take the average annual return over the last decade, over the last 5 years, over the last 1 year, and we make strategic decisions. But what that's done for us is we're not nearly as big as other startups people-wise. We stay lean people-wise. We stay focused product-wise. We only build things that we know people want. We only build things that are sustainable. We operate profitably, and we care deeply about that, and that we think we want to be net producers for the world. We want to, in Bitcoin terms, we want to do well. We want our shareholders to outperform Bitcoin by owning Strike shares. And so you got to be a net producer. You got to have sats flow, as they say. So it's changed us entirely. But I really like, if a business was living as if they were never going to die, the business equivalent of they'd eat donuts every day. They'd never think about relationship and being useful and meaningful and taking care of themselves, right? So that's changed us. It's like meaningful life, cost of capital. Does that make sense?
Yeah, that makes a ton of sense. I'm curious, when you start to talk with the TradFi world a bit, whether it's investors or just institutional kind of road shows and whatnot, whether it's a Series B, Series C round for Strike or whatever it looks like. Over the years, especially post, I would say 2021, 22 maybe, kind of that unlimited venture spigot kind of turned off. You have companies like the Uber model of never making a profit throughout the entire company history, but it doesn't matter because you can raise enough money and just burn it and keep growing in relative market share. So I'm curious, how is that's been the Strike way of thinking, your way of thinking for years. Has the perception from investors or maybe fiat VCs, as you would call it, maybe 5 years ago or 4 years ago, looking at what you're, just said and kind of it's almost like bewilderment, confusion. What do you mean you don't want my money? Or what do you mean you're not going to spend X million on marketing? We'll write the check. Has there been a recognition that, this was always the correct path, or this is the correct, economic calculation, or is it still it's what is that guy talking about?
No, the COVID bubble was not a one-off event. I think it was very meaningful in setting the tone and direction for currency debasement. I mean, the amount of big tech layoffs. So following the fiat COVID bubble was the fastest rate hike ever in that short time frame, and that crushed a lot of these businesses. And so you saw massive layoffs throughout the world. You're still seeing them. You're seeing this almost dual economy where there's still recessionary tendencies that live with us today. And with gold, if you're going to see bullish gold in the face of a hawkish Fed, to me, that's the world is saying, we think differently now.